after what looked like was going to be another bad day for markets, stocks are moving higher. Russell 2000 is up 2.74%. NASDAQ up 1%. S&P is up 1.2%. Dow is up 1.5% today. The odds of a rate cut are soaring from 28.5% yesterday to 66.8% today. What's going on? What do you need to know? What's happening in this market? We're going to get into that in today's episode. And if you guys watched the last video, then you know a lot of this issue is in the crypto markets. And I want to explain what's happening in the crypto markets that is feeding into the stock market and when that might ultimately stop. Do me a quick favor, hit that like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you guys would like to come trade and invest alongside us. Boy, we having a good day today. Now, we're also going to get into Tesla stock specific news and what's happening with Tesla today. You're up 1.3%, but again, I do think better days are ahead of us. So, with that said, let's get started. So let's talk about one of the biggest stories today, and that is going from yesterday, almost no chance of a rate cut, to today, actually pricing in a rate cut again. Again, 66.8% chance of a rate cut, 33.2% chance of a pause. If you look at CNBC, the headline article says one Fed official may have saved the markets from another rout. Why John Williams' remarks matter so much. It says messages that came out of the top echelon at the Fed are measured carefully, calibrated between delivering clear ideas about policy without causing undue reaction in financial markets. That's why a speech Friday from the current New York Fed leader, John Williams, mattered so much to the markets. Ongoing concerns about AI tempered a stock market rally, but traders flipped positions, placing bets on a December rate cut. Now, let me give you a little bit of a backstory. Okay, so the markets, they've been freaking out for a lot of different reasons, right? AI bubble concerns, no rate cut, economy too strong? Yeah, I guess that's a reason to freak out these days. Under the surface, there's really a liquidity issue happening in Bitcoin and crypto. And we'll get into that in just a moment and how that is impacting the markets. But the BLS canceled the GDP report and the personal spending report that we were going to get next Wednesday on November 26th, effectively saying, hey, you're not going to really get any economic data that could give you a rate cut before December 10th. Okay, you can even see today, it says the Fed won't get key inflation data before the next rate decision as BLS cancels October CPI release. They canceled this as well, right? They're just canceling data left and right. November CPI data, previously scheduled to be released on December 10th, Jerome Powell Day, will now be released on December 18th after the Fed decision, the BLS said. So, all hope for a rate cut was lost yesterday. Well, John Williams and another Fed speaker came out and supported a cut today. This, to me, seems very orchestrated. And we'll get into that in just a moment. But first, if you want a good laugh of the day today, NVIDIA's CEO Jensen Huang told staff, quote, the whole world would have fallen apart if NVIDIA delivered a bad quarter. I think that's the most accurate thing I've heard in weeks, okay? Yeah, GG's, okay? It would have been over. Now, here was the big headline today. 7:30 in the morning, Eastern Standard Time today. New York Fed Williams says the Fed can still cut rates in the near term given current policy is modestly restrictive. Now, he didn't say December 10th. he said in the near term, which markets imply to be December 10th. Now, this seems orchestrated to me. Because like the Fed was talking a big game this whole time, but really wanted to cut rates in the first place. Okay? Why? Because you've heard Fed officials say pretty much the opposite of this. Now, Fed Hammock said yesterday that she is heading into Fed meetings with an open mind. It seems like she would be willing to support a rate cut in December, and we talked about that yesterday. But now you get Williams, and you got Fed Moran today that says he would support a 25 basis point cut. And it seems like, even though we're not going to be getting the data, the Fed wanted to cut rates the whole time. Let me give you a little bit of a secret you can walk away from this video with for the rest of your life. Whatever the markets are pricing in is historically what the Fed has done. So Williams' comment today moved the probability from 28.5% to 66.8%. Investors today said, oh yeah, the Fed still wants to cut, and priced in a cut. So the Fed doesn't like to go against this. They haven't went against what the markets have priced in for around 40 plus years. Okay? So it seems like big money that actually bets on what the Fed is going to do is all but certain following Fed Williams' comments that we're actually going to get a rate cut. Now, this is going to move around a little bit, and honestly, a rate cut is not the big story of what's happening in markets these days. Now, before we get into the comments from the Fed and different Fed officials, I want to explain, just so everyone is clear, what has been happening in markets. Tom Lee said yesterday, what's really the problem in markets right now is a liquidity event in crypto. So basically what happened on October 10th is a stable coin dropped to 65 cents on one exchange. Now, kind of like a stock, okay, but a little bit different. So these stable coins, they're supposed to be $1, right? But the price is quoted on each exchange. So you can have one exchange that has one price and another exchange that has a different price, okay? This is arbitrage at its finest in like stocks, right? Somebody might buy a stock on the German market and sell it on the US market. The spread is going to be very small, but if you have enough money, you can make money doing that, right? Even with a very small spread. Well, when you get this, say, Binance or Gemini or whatever it is, right? Coinbase marketplace, that, the liquidity falls out for even a couple of minutes, you start to trigger a lot of liquidations quickly. 2 million accounts got liquidated all at once. Now, Binance, where this actually happened, said that they were going to pay for the damages done. That obviously shouldn't have happened. What Binance should have done is just take a quote from a different exchange, okay, to keep the price at $1. They didn't do that. So what has happened ever since October 10th is this bleed out in crypto, okay, where these liquidations feed liquidations that feed liquidations. It's a cascading effect. You can almost think of it like if every company owned Bitcoin, right? And, to a certain extent, there's debt, there's liabilities, there's payments that need to be paid, there's outflows on company balance sheets. Well, if the price of your asset continues to fall, you're going to have more and more companies that start to get margin calls. Apple's going to be relatively safe until like the last domino falls. The smaller guys, they're going to start getting those margin calls, generally speaking, quicker. So this one event has led into a snowballing of a liquidation. Tom Lee said last night that he knows who is actually having the problems right now, but he doesn't want to name names. So there is severe liquidity issues happening in the crypto market. Well, stocks and crypto are pretty well interconnected from a financial perspective. If you're investing in crypto, you're probably investing in stocks, right? Money managers, they're investing in both of these asset classes. Also, market makers are doing the same thing, trying to create a market in both markets. Algorithms trade, these things tend to go hand in hand. So what happened yesterday is Bitcoin started tanking as the market's NASDAQ was up over 2%. That was a red flag. What happened? Stocks followed suit because you started to get more margin calls and you started to see a liquidity drain from the system. Now, there was a lot of talk of the Japanese yen carry trade blowing up again. There's a lot of talk about the Fed not giving us a rate cut as the reason for yesterday. And while those things may have contributed at least somewhat, I believe it's really this liquidity event in crypto that is causing the weakness in markets. For weeks now, we're like, this sell-off just doesn't make sense. Strong economy, Nvidia earnings are good, Walmart earnings are good. I was having a conversation with my mom, and I'm like, yeah, the markets were expecting 50,000 jobs. We got 119,000 jobs, and that caused the markets to crash. And she's like, that makes no sense. Wouldn't that be a good thing? Yeah, it is a good thing. Okay. And Wall Street is trying to draw blame anywhere they can without signifying this liquidity issue, because liquidity crises are not fun. Okay? When you're dealing with margin calls and a snowball effect, there's a lot of uncertainty to how bad the problem is. Think, commercial real estate, or think the banking crisis, right? It's once you identify a liquidity issue, it can almost feed into itself, kind of like a bank run. Okay, now good news is today Bitcoin hit $80,000 on the low, and it's back up to $85,000. It seems like a bit of liquidity went back into Bitcoin, and I've had a lot of people ask me, like, what causes a liquidity event to end? Well, eventually there's enough margin calls, there's enough liquidation that ends, and I think we're kind of to that stage already. So that's part of the good news. The other aspect of this is markets want to grab onto any form of liquidity. So the Fed, the probabilities of a rate cut in the last couple of days that have collapsed did not help this liquidity event. Well, today, odds of a rate cut are rising again. This is orchestrated, okay? This is by design, in my opinion. The Fed always had the plan of cutting rates in December. Now that they have no other economic data to hang their hat on, they're like, fine, we'll support a rate cut in December, right? And that's why big money just sharply shot up the odds of a rate cut. Now, Fed Williams says that inflation progress has stalled but should be on track to 2% in 2027. Fed Williams says economic growth has slowed and the labor market has gradually cooled. He says labor market is now comparable to pre-pandemic years when it was not overheated. He says it's imperative that the Fed meets its inflation target, but without undue risk to the maximum employment goal. And he says that downside risks to employment have eased, while he also says that tariffs added 0.5 to 0.75 percentage point to inflation. So following just these comments, which sound pretty typical for Williams and a bullish Fed official, the odds of a December rate cut within minutes surged, okay, from the 20% range yesterday to over 50%, pricing in a rate cut again. It says here, crypto liquidations top 1.9 billion in the last 24 hours. CoinGlass reports 1.9 billion in crypto liquidations in 24 hours, hitting 403,000 traders. Analysts cite renewed risk-off sentiment and tech stock selling as drivers. The crypto market has fallen into extreme fear, reflecting a sharp drop in risk appetite. Fed Williams also said today that clear communication can limit market disruption. Basically, the Fed's idea was they were going to cut rates in December. Why are they, beating around the bush is kind of what it sounds like there. Fed Williams says we have not been on a sustainable fiscal path for a while. He says he does not like the notion of a short-run neutral rate. Fed Williams says that he expects roughly trend growth this year and next. He says that fiscal policy may be boosting the neutral rate by 25 to 50 basis points. And he says markets seem to be very bullish on AI, anticipating a period of strong growth. Now, John Williams says that surveys provide better information when questions are about individual circumstances, not bigger issues. He says it's important to have accurate and reliable data sources. He says history tells us not to over-index for the last 5 years. Now, Fed Collins said today that the September jobs data was mixed, which is also likely leading to these odds moving higher for a rate cut. Williams says the labor market has been cooling over 2 years now, with demand for labor softening and unemployment rates rising. Fed Collins says mildly or moderately restrictive policy is appropriate. She says, I expect growth to slow a bit later this year. She says inflation remains elevated. She also said that she is hesitant to think about the next policy meeting. She said today, over time, I expect we will lower rates further. Fed Moran said today implications of yesterday's data are obviously dovish. Fed Moran says the lack of data doesn't mean we don't have a forecast, and he says we should be forecast dependent, not data dependent. Fed Moran says I would vote for a 25 basis point cut if my vote were a marginal vote. Fed Moran says labor market data is not as strong as we would like. And Fed Jefferson says today that he sees key differences between dot-com era and AI today. And he says that is because AI firms have actual earnings. Another headline about the crypto sell-off that deepens as ETF outflows surge. It says the crypto sell-off is accelerating as nearly $900 million exit spot Bitcoin ETFs led by the iShares Bitcoin Trust. Saxo's strategist said today the iShares Ethereum ETF also continued to weaken. Fed Logan says today that she expects to resume growth of the Fed's balance sheet before long. So that's quantitative easing, and that's historically good for stocks. But she does repeat that she would find it difficult to support a December rate cut. But again, the real issue for this market has been crypto liquidations, and the thing that is causing markets to get better today is any sign of liquidity coming. The Fed adding to their balance sheet, giving us a rate cut. Even though I personally don't think that means too much, it is a sign of hope for the liquidity situation in Bitcoin. And the fact that you did bounce about $5,000 in Bitcoin from the low of the day today signifies maybe the liquidity event is coming to an end. You can see Bitcoin getting back to some of the lower levels of the April crash. So you've seen quite a flush out already. Now, we did get some economic data today. The S&P Global Composite PMI for November came in at 54.8, beating expectations of 53.8. Manufacturing PMIs came in at 51.9, missing expectations of 52. And the S&P Global Services PMI came in at 55.0, missing expectations of 54. Numbers for Michigan consumer sentiment came in at 51.0, beating estimates of 50.3. 5-year inflation expectations came in at 3.4%. Coming in much better than the expected 3.6% and much better than last month's expected 3.9%. Consumer expectations came in at 51.0, better than the estimated 49.0. Current conditions came in at 51.1, missing expectations of 52.3. And 1-year inflation expectations came in lower than expected at 4.5%. Beating expectations of 4.7%. So generally better than expected economic data. Now, Putin says today that he has received the U.S. plan for Ukraine. He says, quote, I think it can be a basis for the final resolution. The text wasn't discussed with the U.S. and Ukraine is against it. He also says we're ready for a peaceful resolution. If we're just looking at this market, like, you're so oversold at this point. You know, NASDAQ was down about 8%. S&P was down about 6% from all-time highs. Russell was down closer to 9% from all-time highs. When, in all reality, we've really only had a liquidity event in markets. Sure, not getting a rate cut. Like, Is that great news? No. Is it the end of the world? No. Nvidia showed the AI boom is alive and well. Walmart earnings were great. Economic data was pretty damn good. All of those are big net positives, yet you've still had pressure in this market, and it's coming from the crypto liquidations. It looks like things got a little bit better today, though. Now, when you mix that with just how fearful markets are, it seems like, or would seem like, the selling is coming to an end. Now, the CNN Fear and Greed Index is sitting at 11. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility was in extreme fear yesterday when this number hit as low as 6. 6? Are we serious now? That's crazy. You're back in fear today. Safe haven demand, extreme fear, and junk bond demand, extreme fear. As we talked about, the AI Investor Sentiment Survey still shows a crazy amount of bears. 43.6% of investors are bearish, 23.9% are neutral, and 32.6% are bullish. The percent of stocks trading above their 50-day moving average up a lot today, up 9.26% today to 38.29%, but that's still even pretty deep into correctionary levels, okay? So even following today, you're still very oversold in this market. Now the VIX is down almost 9% today. That's great. And as we talked about in prior videos, you're getting to a point where you have to see a real problem start, right? You have to see liquidations get worse. You have to see the economy look like it's going into a recession. You have to see something else happen at this point to get the fear to continue to rise. The VIX was at, some of these other high points, excluding April, late December 2024, March of 2025, recently on, October 16th. Once you get to these levels, fear typically starts to come down, not go up, unless you actually have some kind of problem or crisis. And we really haven't had that, just the crypto liquidations. In the news today, specifically for Tesla, Tesla has released the new Model Y Performance in Canada with a starting price of about 75,000 Canadian dollars, with deliveries that start Q1 2026. Tesla has also released the updated 2026 Model S and Model X in China that you can only buy through their inventory. Tesla has secured a new Megapack order worth $170 million from Tag Energy to build a 4-hour big battery next to what will be the biggest wind farm in Australia and the Southern Hemisphere. The battery energy storage system will be 150 megawatt / 600 megawatt hours. The wind and battery storage park will account for nearly 10% of Victoria's electricity needs. Building work will start early next year. Tesla spotted for the first time doing robotaxi validation testing in Boston, Massachusetts today in preparation for future service expansion. Really the deal, right? Tesla right now is mapping all of these areas and then putting in the regulatory, permit applications. So once they start to get approved, they're ready to go in these areas. And that's why we're seeing more and more of these validation vehicles. In option activity today from hedge funds and institutions, you have 122 different trades totaling $167.4 million with a positive order value of 87%. So it does look very positive, but it is a relatively slower day as far as option activity is concerned. Not super surprising. Now, Tesla's short interest continues to rise, now to 3.25%. You have 77.5 million shares sold short in Tesla, and about 1.14 million shares being sold short today. So there is some pressure on Tesla stock. And look at that. Even in the time of recording this video, you could see crypto, Bitcoin leads the decline. Bitcoin now down to $84,300. You've started to decline in the last 10 minutes or so. And then what happens? A couple minutes later, the NASDAQ starts to go with it. This is a liquidity issue in Bitcoin. The reason markets got a little bit better today, kind of stabilized, is there's hope that there's liquidity coming from a rate cut. Okay? This is a liquidity problem in crypto. Good news is, I will reiterate, you've already fallen so much. You've already seen so many margin calls. You're probably getting to the point where you've seen enough. Okay, could crypto fall further? Yes, but so many people have already been liquidated. You got to be getting pretty close to the end of the liquidity issue in crypto, in my opinion. So again, specifically for Tesla, this liquidity issue is going to hold precedence. Tesla's kind of in a range right now between finding support at the 100-day moving average around $380 per share and a little bit of resistance around the 50-day moving average at $434 per share. Again, I think we're getting to the end of this liquidity situation, but if it does get worse, you're going to see Tesla follow what the markets do. If the liquidity situation gets worse, the markets are going to fall and Tesla's going to fall. But I'm optimistic that we can start to stabilize out and start to make a move to the upside. We seen yesterday just how explosive this market will be once the margin calls end in crypto. I mean, look at what happened yesterday for the markets before the selling. It was explosive to the upside. And that's what we're going to see once this liquidity event comes to an end. So let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. If you guys want to come invest and trade with us, come get involved in the trading community. That link is down below in the description of today's episode. Have a great rest of your day, and I will see you in the next one.